Welcome back. Today marks the 3-month anniversary of the S&P closing lows. It's up nearly 25% since then, one of the fastest recoveries on record. So could more upside be on the way? Let's take a look at what the charts are saying with Katie Stockton from Fairlead Strategies. She's also a CNBC contributor. Great to have you here, Katie.
Good to be here.
So do the charts tell you that we can continue buying here? What should we, what shouldn't we?
I think we wait to add exposure, but what we did see recently is a confirmed breakout to new highs, and that's something I wouldn't want to fight against. There's been, I'd say, a loss of momentum relative to the first push off of the April low, and that's pretty natural. But even still, the breadth was strong enough, the momentum was strong enough to lift the major indices to new highs. So we feel that we have to honor this breakout because as a technical analyst, we also use a lot of indicators. And price is king. All of the indicators are based on price. So even if they're telling you one thing that contrasts what you're seeing in price, you want to defer to the price action. So we have big breakouts.
What are the charts telling you about those big technology stocks that powered the major indices to these levels?
Well, indeed, they did power it. And we saw such a push higher from them at the end of June. And it struck me as something maybe like window dressing, right, where people are trying to boost their portfolios with these positions. They want to show that they own the winners. And then we saw the very next day, as we started the second half, this so-called great rotation. And what it showed was that the megacaps came under pressure as the relatively oversold areas or segments of the market caught a bid. So I thought that was really interesting and sort of a theme in the market right now where the megacaps, the large cap tech names, are actually poised to lose relative strength, still to participate, but not maybe the source of upside leadership that they have been.
Are there exceptions to that? I mean, we have a golden cross in the technical charts for Amazon right now, even as we have Prime Day rolling out.
We even had one for the S&P 500. So a golden cross is bullish. It's bullish long term. But in fact, it tends to be a very poor short-term market timing device. We actually had death crosses in both the S&P 500 and Amazon within a few days of the April low. So if you think about that, they're just not great short-term timing devices. So we do see that as validation of the strength of the relief rally, but we don't see it as a reason to add exposure right at this moment. But rather, we want to take that next pullback following the breakout in the S&P, use it to add exposure to stocks that are quality.
How about Madna? Because I know you came with that chart here today, too. You see a breakout there?
Yeah, and along the lines of the theme of looking for relatively oversold opportunities, we culled the S&P 500, and you can find a lot of names that are advancing from downtrends, breaking through short-term resistance that look far less overstretched, perhaps, than the mega caps. And Moderna's one name that stands out to us as a long-term turnaround play, broke through some short-term resistance on its chart just recently, and that acts as a positive catalyst.
What do you make of Nvidia? We love big round numbers here, and it's approaching this $4 trillion market cap. And it had been neck and neck with Microsoft and Apple for a long time. Now Microsoft's down at around 3 points down, at $3.7 trillion in market cap. Apple close to just 3 even. So, I mean, Nvidia opening up a nearly $1 trillion market cap lead on Apple. What do the charts tell you about that?
It is wild. So such an extended up move, and yet it keeps going both for Nvidia and also for Microsoft. So we don't want to fight that momentum. We actually have been fighting that momentum to some degree. But once we see the breakouts to new highs, you have to honor those breakouts, and Nvidia does have one. We're a little bit more interested in the likes of the oversold semiconductor equipment names right now, the names that have advanced from those cyclical downtrends, because they have a little bit less of a proof point as they come into their earnings report July, August. And, they're coming in with that relatively oversold condition that I think will benefit them as they go through that proof point.
I'm going to put you on the spot a little bit here, but DXY, we've seen some technical breakdown there. We were having a conversation with Afsani Beshlas earlier in the show about rotation away from the dollar and hedging against the dollar, and this being a dynamic for institutional investors right now. How closely are you watching those charts?
Very closely, always. Anything that affects equities, we watch on a daily basis. And the dollar index has a proper downtrend in place. It has broken through some very long-term support to suggest that the cyclical downtrend will keep hold. In terms of the short term, it's more neutral to positive, actually, in the short term. And yet I don't think that it's a tradable counter trend move that we're necessarily looking at. And if you flip it over, look at the euro, of course, has this major breakout. So I do think that euro trend of strengthening is something that will characterize much of this year.